Hey traders, Todd Gordon here with TradingAnalysis.com. This is for CNBC's Trading Nation. Traders, today we're going to take a look at a setup in Morgan Stanley. This will be a trade that should be established before the presidential results, which come out on Wednesday the 9th. We're going to take advantage of what I think to be an increase in volatility realized in the markets, which will basically break ranges of the currency markets, of the bond markets, I think of the stock markets, and that's going to help the investment banks' trading activities. Also, we are seeing bond markets continue to press lower, interest rates up, which does help the net interest margins of the various financial centers. So fundamentals and intermarket analysis of the banks look solid. Morgan Stanley, as we move into the chart, you could see that there is a nice agreement here between the technicals and fundamentals. So as we dive in, you can see that Morgan Stanley is coming up on a test of the highs from this time last year, right around the $36 mark. So if we just kind of expand that across, you can see the markets want to go up and try to test that area. So the $36 mark will be key. Let's keep that in mind as we go zooming here a little bit towards the tighter time frames. So if we're trying to get up to the $36 region, which would be right about here, you can see that the market needs to break this bit of consolidation that's been in play just over the last week or so ahead of the election. And I think post-election, we should be able to move up towards that $36 mark. So ahead of the election, let's put on a trade in the options market that is going to take advantage of a move up. This will be a fixed investment. I will pay a certain amount of money to put this call debit spread on. So this is what I stand to risk regardless of the results following the election. Okay, so this is a trade that I've fully accepted the risk, and we could lose it or we could have a nice trade. We'll try to put on a trade that it has a positive reward to risk ratio, which basically means we'll risk one, hopefully make two or three to justify the risk of the unknown that we'll have to take during the overnight session. Okay, so as we go over to the option platform, I'm going to go out to the November monthlies. All we need is 11 days. We're going to know if this trade works or not very soon. So we're just going to go out 11 days. I'm going to go ahead and buy the 34 call, which is just above the current price of $33.77. We're going to pair that up with the sale of the $36 call. Remember, that's the range target from this time last year. So altogether, the 34-36 call spread is going to cost us 57 cents. It's a $2 wide spread, so we stand to make $143 per $57 that we risk on this option spread. That's all we have to risk on this trade. So I like the reward to risk ratio. I'm locked in. I'm going to carry this through the election, regardless of what happens. $57 up to 58. Review order, place it, and it's working with the market makers. All right, guys, that's the trade in Morgan Stanley ahead of this explosive volatility-inducing election. So it should be interesting for CNBC's Trading Nation. I'm Todd Gordon. Be sure to follow us at Trading Nation on Twitter, and we'll keep you updated on this trade as well as all the others. See you guys in the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.